I'm here to provide you with some information as well as an opportunity for your investment to grow, returning 10 to 12%. My strategy is very simple. We just own hundreds of shares in Dojo Industrial Average companies. They're nothing but they're composed of 30 companies. They are among the biggest, best known, most highly regarded public companies. They are a mirror of the overall US equity market. They are very well established and stable companies that has a long history of consistent earnings, growth and dividend payments. And they have strong balance sheets and good cash flow. What else you want to invest in a company? I think these companies got everything. And their market capitalization is anywhere from 30 billion to 200 billion. Market capitalization is nothing but the current value of the company in USD. Here are the list of all Dow Jones industrial companies. Here are the 30 companies. I have listed it out. Average rate of return from over the past 100 years of these companies, either from price appreciation or dividends. Wait, what are dividends? So dividends are nothing but it's a distribution of a profit earned from a company's operation. In simple words, it means a company is willing to share their profits from their earnings with their shareholders. The company's board of directors declare cash dividends annually or quarterly. Usually, dividends are paid 3 times annually. So as I mentioned, my primary purpose of the investment is first, preserve your capital, and second is to generate income from your investments. So my strategy works, unfortunately, only after purchasing hundreds of shares in the Dow Jones stocks. Well, yes, we have to buy shares in hundreds, not ones or tens. So here is an example. For example, if you purchase 200 shares of this pharmaceutical company, say Pfizer. Pfizer is currently trading at $35.36 with current dividend yield of 3.62% or 0.32 cents per share. So if you purchase all 200 shares, it's gonna cost anywhere from $7,000. It's gonna cost something around $7,072 in dollars. So this is the best thing. We didn't do anything. We just buy shares and we just hold it. Just because we are holding 200 shares, as Pfizer is paying 32 cents per share, and they're paying you 3 times a year, just by purchasing them, you made $192 in profit. How? Here, 32 cents times 200 shares, and dividends are distributed 3 times a year, and here is 192. So now, see, what if the stock increased by $2? Initially the stock price was $35.36. Now, as we assume that it has increased by $2 by the end of the year, so now it has become 37.36 minus 35.36 times 200 shares, so it's going to be $400 increase in profit. Wait, but we keep getting the dividend, right? 3 times annually, so we have to include that one too. So then it's going to be $400 plus your $192 in dividends. So your total going to be 400 plus 192 in dividends, total going to be 592, which is almost 8.3% return on investment. we need to understand what are option contracts and what are calls and what are puts. So what are option contracts? It's an agreement between two parties, a buyer and a seller, that gives a purchaser of an option the right to buy or sell a particular asset at a later date at an agreed price. Well, these option contracts are used in securities, commodities, and real estate transactions all the time. Do you know airline industry makes more money by selling oil contracts than selling airline services? How? Airline industry purchases oil contracts when oil prices are low and sell the contracts when oil prices increase in its price. Well, I hope this helps you understand how the contract system works in airline industry. Now, what is call and what is put? A call, an individual purchases a call option when he predicts that there will be a growth in a share price. A put contract is purchased by an individual when he predicts that there will be a decrease in the share price. Usually the contracts be purchased with a certified stockbroker. So one of the finest stockbrokers here in US are Charles Schwab, E-Trade, TradeSking, and so forth. This is how the option trading platform page looks like. The one to the left are calls, the one to the right are puts. Here is the money making strategy. We sell the option contracts at higher price for a certain period of time. Either it could be a month, 2 months, or 6 months. The longer contracts we sell, the higher premiums we receive as a seller. If our contracts get sold, we are obligated to deliver our shares at that predetermined price. So our profits, the price we sold minus the price we purchased plus the premium we receive plus the dividends. What if the contracts never get exercised? That's still okay. We still keep receiving premiums. This put option works similar like insurance. The put option seller is obligated to purchase shares from us at a predetermined price till the expiration date. Let's say Pfizer is trading at 35. Due to some management change or a drug not being approved by FDA, the stock price might affect and decrease in price. Say the stock price has decreased to $25. Well, we don't have to worry because we purchased the put option for the shares we owned. So we have a right to exercise our option contract. Upon exercising, a seller is obligated to purchase the shares at 35 but not 25. So we continue selling contracts in this process for every month or 2 months and so on. By receiving premiums, we increase our earnings potential by protecting our asset simultaneously. So here is the picture. Guys, this is very professional way of investing. It has a great potential for your investment to grow. All I need from you is a commitment, and let me hold your valuable fund with me for at least 12 to 13 months, and let me run these strategies for you in a very professional manner. These strategies are used in financial and investment markets all the time, and great icons like Warren Buffett, Carl Icahn use these strategies. So why do you have to invest with me? Because I have skill, I have education with a finance background, and above all, I think I have an exposure to these markets being in the foreign country. I'm looking forward to work with you guys. If you have any questions, please email me.